Hi dear friends, how are you all? Welcome to YouTube channel HR Tutorials India. In this video, we will be discussing exemption from tax. What is tax exemption on salary? This is a very interesting concept which each and every employee will be waiting for so that they can exempt from tax and get the tax benefit as much as possible. So in this video, we will see what is tax exemption and what are the different types of tax exemptions on salary. Tax exemption is the deduction or removal of liability to make a compulsory payment that would otherwise be imposed by a ruling power upon persons, property, income, or transactions. Tax exempt status may provide the complete relief from taxes, reduced rates, or tax on only a portion of items. In simple words, tax exemption is the reduced or removal of liability from making a compulsory payment which is imposed by the ruling power upon the person's property, income, or transactions. With the help of tax exemptions, there could be a complete relief from taxes, or there could be a reduce of tax rates, or tax may be paid only on small portions of items. Income tax exemptions are specific income that is not included for calculating the liability for paying income taxes. Under Section 10 of Income Tax Act defines that the provisions of income tax exemptions, any taxpayer in the country can qualify for income tax exemptions. Hence, income tax exemptions are specific income are not included for calculating the tax liability for paying income taxes. Types of income tax exemptions on salary. Now let us see what are the different types of tax exemptions are on salary. House rent allowance HRA. An employee can claim house rent allowance HRA from the employer if he or she is paying the rent towards accommodation. Exemptions received on HRA house rent allowance will be minimum of total HRA received by one's employer, 50% of the basic of individuals living in metro cities or 40% for non-metro, and less than 10% of the basic salary. In simple words, HRA or house rent allowance is one of the tax exemptions where an employee can claim from the employer if he or she is paying the rent towards accommodation. There are three options where the HRA is calculated, and whichever is lesser, the amount of HRA will be exempted from income tax. Total HRA received by employers. Whatever the HRA is received by employer is one amount. 50% of the basic salary individuals living in metropolitan cities or 40% for non-metropolitan cities. So this is the second amount. And finally, the third amount is the difference of the rent paid by the employee and the 10% of basic salary. Among these three, whichever the amount is lesser, that specific amount will be exempted from income tax. Standard Deduction. The Indian Finance Minister, while presenting the Union Budget 2018, announced a standard deduction amounting of Rs 40,000 for salaried employees and was further increased to Rs 50,000 in the Interim Budget 2019. This was in place of transport allowance of Rs 19,200 and the medical reimbursement of Rs 15,000 per annum. A standard deduction of 50,000 is straightaway tax exempted for employees. Earlier, the standard deduction was 40,000, but it was increased to 50,000 in Interim Budget 2019. Earlier, transport allowance and medical reimbursement were exempted, now which is replaced by standard deduction. Children Education Allowance. Children Education Allowance is allowed Rs 100 per month per child up to 2 children. There is an exemption for Children Education Allowance which is of Rs 100 per month per child, and the limit is for 2 children. Leave Travel Allowance LTA. The income tax law also provides for an LTA exemption to salaried employees restricted to travel expenses incurred during the leaves by them. Please note that the exemption does not include costs incurred for the entire trip such as shopping, food expenses, entertainment, and leisure among others. You can claim LTA twice in a block of 4 years. In case of an individual doesn't use the exemption within a block, he or she could carry the same to the next block. Leave Travel Allowance or LTA is also a tax exemption for the employees who are drawing salaries from a company. But LTA has their own restrictions which can be claimed only with respect to travel, but not the expenditure which is made on shopping, food expenses, entertainment, leisure, etc. Now let us see what are the restrictions which are applicable to LTA. LTA only covers the domestic travel and not cost of international travel. The mode of such travel must be either railway or air travel or public transport. So these are the two rules or the restrictions with respect to LTA for exempting from tax. Professional tax PT. Professional tax which is deducted from salary is completely exempted. That is, professional tax deducted for 12 months for the respective financial year. In simple words, complete professional tax which is deducted by the employer is completely exempted from taxes. Under Section 80C, Under Section 80C of Income Tax Act 1961, the employee can claim the maximum deduction benefits at the time of TDS on salary up to the limit of Rs 1,50,000 per annum. There are many tax-saving instruments covered under this section, such as annuity pension schemes or national pension scheme, PPF Public Provident Fund or VPF, Sukanya Samriddhi account, ULIP Unit Linked Investment Plan, ELSS Equity Linked Savings Scheme, tuition fee for children, NSC National Savings Certificate, life insurance premium, deposits, tax savings or post office time deposits. 80C is one of the tax exemption of Income Tax Act 1961. Under this section 80C, the employee can claim a maximum deduction benefit of a limit of Rs 1,50,000, and an employee can exempt from taxes by saving in the following schemes, that is pension scheme, PPF, Sukanya Samriddhi, ULIP, ELSS, tuition fee for children, NSC, life insurance premium or fixed deposits. Section 80D. Section 80D is a deduction you can claim on medical expenses. One could save tax on medical insurance premiums paid for the health of self, family and dependent parents. The limit for Section 80D deduction is Rs 25,000 for premiums paid for self and family. For premiums paid for senior citizens, you can claim deductions up to 50,000 per annum. Additional health checkups to the extent of Rs 5,000 are also allowed and covered within the overall limit. Your employer may pay premium on yourself behalf and deduct it from your salaries. Such premium paid is also eligible for deduction under Section 80D. Section 80DD. Deduction allowed up to 75,000 for taking care of a disabled parent with 40% or more of one or more disability. Deduction allowed up to Rs 1,25,000 per annum for taking care of disabled persons with 80% or more of one or more disability. Following are the conditions that you need to fulfill in order to avail the benefits of this section. You must be a guardian of a differently abled individual. That person can be physically or mentally disabled. You have to give a certificate from an authorized medical practitioner. All the expenses arising from the rehabilitation, training, treatment and nursing. Therefore, any amount deposited under the scheme taken for the different abled dependent will be entitled to income tax exemption. Deductions of about Rs 1 lakh can be claimed if the dependent is suffering from any severe disability. Hence, under the Section 80DD, an amount of Rs 1 lakh can be claimed if the dependent is suffering from any severe disability. Section 80DDB. This deduction is primarily for those who need to get treatment for serious disease. As per this section, a person can avail a deduction of Rs 40,000 against their income tax. Senior citizens aged between 60 years to 80 years can claim deduction either for the actual amount paid for the medical treatment or Rs 1 lakh, whichever is lower. Senior citizens aged above 80 years can claim deduction either for the actual amount paid for the medical treatment or Rs 1 lakh, whichever is lower. Deduction is applicable for expenditure made to a treatment, a disease for self or someone dependent. Certificate for illness must be from a government doctor. 1 lakh rupees is deduction limit for senior citizens. These are the conditions to avail the tax exemption under the Section 80DDB. That is, the deduction is applicable for the expenditure made by the treatment for the disease of self or someone dependent, and the certificate of illness must be issued by the government doctor. And finally, Rs 1 lakh is the deduction limit for senior citizens. Section 80G. Section 80G of Income Tax Act 1961 offers income tax reduction to an assessee who makes donations to charitable organizations. This reduction varies based on the receiving organization, which implies that one may avail reduction of 50% or 100% of the amount donated with or without restriction. An employee can exempt from taxes who makes a donation to charitable organizations. And the deduction varies based on the receiving organizations, which implies that one may avail the deduction of 50% or 100% of the amount donated with or without restrictions of the amount paid to the charitable organizations. Interest on home loan, Section 80C and Section 24. Under the Section 24, interest on home loan is one of the tax exemption on salaries which can be deducted as an interest paid on home loan for the self-occupied property. And the limit of home loan interest is 2 lakhs per annum. But if the house property is let out, then you can claim a deduction for the entire interest pertaining to such a home loan. And in addition to the above, one can also claim the principal amount of housing loan repayment as a deduction under 80C up to a maximum limit of Rs 1,50,000. Section 80 TTA. Section 80 TTA explains about the income tax deduction on the income earned from savings account interest, and this exemption is available for individuals and HCFs also. If the income earned from bank through interest is less than 10,000, then the whole amount is allowed as a deduction. However, if the income from bank interest exceeds 10,000, then the amount exceeded on 10,000 will be taxable. Under Section 80E. Section 80E is one of the tax exemption on salary which provides a deduction of interest on education loan, and it has no limit. The condition for availing this exemption is that the loan should have been taken from bank or a financial institution for pursuing higher education in India or abroad by the individual himself or his spouse or children. And the claiming of this income tax exemption begins from the year in which the loan starts getting repaid up to the next 7 years, that is total of 8 assessment years, or before repayment of the loan, whichever is earlier. And it has the applicability that even the legal guardian could also avail this income tax deduction. 80EE. Section 80EE is another type of tax exemption on salary which allows the homeowners to claim an additional deduction of Rs 50,000 under Section 24 for interest component of the home loan EMI, provided that the home loan must not be more than 35 lakhs and the value of the property should not be more than 50 lakhs. And a condition is that the individual must not have any other property registered under his or her name at the time of loan sanction. Tax exemptions and limit on salary. So dear friends, we have seen different types of tax exemptions on salary. Now let us see what are the limitations of tax exemptions on salary. Section 80C, deduction on investment, and the limit is Rs 1,50,000, which includes home loan principal, EPF, life insurance premium, ELSS, tuition fee and NPS. Its income deposits, which consists of Sukanya Samriddhi Yojana till the daughter's age achieves 21 years. PF and VPF, Public Provident Fund and Voluntary Provident Fund, and the period is for 15 years, Post Office Deposit and National Savings Certificate. Then comes interest on home loan under Section 80C and Section 24, and the limit is Rs 2 lakhs. Section 80 TTA, deduction on gross total income or interest on savings bank account, and the limit is 10,000. Section 80E, deduction on interest on education loan for higher studies, and it has no limit. Section 80EE, deductions on home loan interest for first-time home owners, and the limit is 50,000. Section 80G, differs deductions for donations towards social causes, and the limit is 50%. Section 80D, deduction on premium paid for medical insurance, and the limit is 25,000 for self and family, and another 25,000 for parents. Section 80DD, deduction for rehabilitation of handicapped dependent relative. For 40% disabled, deduction allowed is 75,000. For 80% disabled, deduction allowed is 1,25,000. Section 80DDB, deduction for medical expenditure on self or dependent relative. The actual amount paid for medical treatment, the limit is 40,000. Senior citizen aged between 60 years to 80 years, and the limit is 1 lakh. Important notes. Education cess. An additional of 4% health and educational cess will be applicable on the tax amount calculated as above. Secondary and higher education cess. Surcharge. 10% of income tax where total income exceeds 50 lakhs up to 1 crore. 10% of income tax where the total income exceeds 1 crore. Apart from income tax calculated for the employees, an additional 4% of health and education cess has to be paid extra by the individual towards cess. And there will be a 10% of surcharge on income tax which need to be paid if the total income exceeds 50 lakhs up to 1 crore. And an additional of 15% of surcharge has to be paid in the income tax department where the total income exceeds 1 crore per annum. Tax rebate. There is a tax rebate of 5% under Section 87A for the employers whose annual salary package is 5 lakhs or less. So dear friends, hope you understood what is tax exemption and what are the different types of tax exemptions and also the limitations of tax exemptions on salary of an employee. And we have also seen the important notes related to health and education cess, surcharge and the tax rebate. If you have any queries or questions related to this video, please do comment in the comment section. And if you like this video, please do subscribe and share among your friends. Thank you very much for watching this video. Have a nice day.